Okay, awesome. Heidi, you're there?
I'm
I'm here.
here.
Okay, cool. So, Denise, when we are done, just go ahead and hang up because I have you on a conference with Heidi that has to stay on. So I can't hang up on you, okay?
Okay.
Okay, cool. So we'll tell you when to start. When are you ready, Matt? Oh, wow, look at me.
Sorry, I was
It's
trying
okay.
trying to cut out as much of the high def stuff as I could.
Yeah,
All right.
that's fine. You can keep my look at my head's all cut off.
You want me to back that up real quick before?
Yeah, like look at my head's all. There you go. You had it right. There we go. That works.
Okay, I'm taking you back live now,
Okay.
and then I'm gonna go and check.
Are we back? Okay, we are back. So hopefully the video quality is better this time. We apologize. We are trying to do something brand new. So keep letting us know if it's not working or if it just doesn't look great. We apologize. We'll get it fixed for next week. But still a lot of great information, important things to know. I've got Denise Taylor, my tax grandma, on the phone. How are you, Denise?
I'm doing fine, and yourself?
I'm doing great. This is the best you've ever sounded for us, right, Heidi?
Yes, absolutely. Sounds wonderful.
Yeah, so we're all recording from somewhere else, Denise. You're calling in from the phone. I've got Heidi on the phone and zooming with me. I'm zooming. We're on YouTube, we're on Facebook, and we are on Twitch. So everybody's watching, and they're hearing and learning all about mortgage and everything that goes along with it, which is your taxes. And tax returns are very important, especially for those self-employed borrowers. So you told me you had some great information to bring to us that was really important that was just passed with that CARES bill, right?
Correct. Yeah, it's been a wild ride. I mean, this is my 50th year, and it has been insane with all of the acts that keep getting passed. As soon as you think you got it right, they change it. So it's been really good for the taxpayers. They've done some great things, and it's just really strange. Weird things like estimated payments. Of course, the tax season being extended to July the 15th of this year, giving you another couple of months to even get your taxes in and get them paid. But remember, if you do an extension in July, if you don't get it in, you have till October, as we've always had, but that's an extension to file, not an extension to pay. There's no penalties as long as you get it paid, whatever you owe or whatever you expect to owe by the 15th of July. And they changed anybody that's on estimated payments. There's usually an estimated payment due April the 15th. That was extended to July the 15th. And then the second payment, which is due on June the 15th, was also extended to July the 15th. So somehow you're supposed to be able to get your first and your second payments all in at the same time, which is a little crazy, but it is what it is.
Yeah, so I
So
was going to actually ask you about that. So there were a lot of people that filed taxes before all of this came about, and were planning to make the payment for the taxes that they owed by April 15th. If they had already filed, but then they made this announcement, are they still okay to pay by July the 15th, or are they
yes,
technically due the minute they file?
no, there's no penalties for. I've been doing returns, and even it's just been crazy. There's absolutely no penalties coming up or showing. They have done everything to July the 15th. That's going to be one incredible day. Right now, all the tax liens, people that have tax problems, their liens are on hold, their levies are on hold. Offer and compromises, people that were in progress with offer and compromises, if they were behind on their 18 as a condition for their offer, or were waiting for additional documents to get to their text or whatever, all of it, it's just like we're in a time zone. Like they just boxed up this time, and it's just super strange. It's really incredible. Nothing's going on. If you try to contact the IRS right now, there's basically nobody's home, and it's a pretty crazy time. But very interesting.
Yeah, very interesting. So you did mention though that there were some there were some changes that were passed that we didn't have that we have now that were going to be very beneficial. So give us that information.
Okay, you've had several acts. You had the Consolidation Act, which was passed right in February. That's the one that took there's some other things that are in there, but the four major things that went back that kind of that affect everybody was the forgiveness of the foreclosure. You would have been involved with people you knew that had that in your industry, and you had the reinstatement of the PMI. That you can now deduct that. So the canceled debt on the qualified principal residence was reenacted, which had been taken away in 18. That went back with the law that was passed in 20. Your mortgage interest premium, called PMI, was reinstated. Your medical expense deduction went back to 7.5% from it was bumped to 10. So some people were able to get some of those medical deductions that they had if they went back to 18. The qualified tuition and related expenses went back, and the employer's credit for family leave came back. So it was done early in February, right after we got into tax season. What's been passed since then was the CARE Act and the Secure Act. And the CARE Act was passed on March the 27th, and that changed quite a bit of things. That went back, that brought in the stimulus, all the stuff we're doing with stimulus right now. Charitable contributions were changed. You could contribute more money and get more credit for it. It's kind of more business related, and net operating losses is the big one. Anybody that has what they call an NOL were taken away in 2018. So with all of this problems that are going, there's going to be so many businesses that have really bad years this year, and they are going to be able to take those back 5 years. So any years that they had profit, they can go back and amend those years and get the tax money that they paid on the taxes on their profits, and that money will come back to them as a refund, and so they can take their losses back. And we used to have that, but then it went away in 18, and so it's really excited that that's back again. There's been so many.
Yeah. So let's talk about that a little bit, because I think that's probably the biggest win that we've had. I mean, obviously all those other things are still really great as well. But if you, like PMI insurance, this is a mortgage show, real estate show. There's a lot of people that are buying homes that are, getting mortgage insurance because they don't have 20% down payment. Even a lot of people refinancing still have to take mortgage insurance because they don't quite have that 20% equity. And, before it was not tax deductible. So it was, a lot of people were striving to get to that 20% down mark. And now with it being tax deductible, it's no different than really your mortgage interest write-off or your property taxes. You can basically take everything but the principal reduction in the deduction from your expenses, correct?
Correct.
Okay.
No, you got it. You're right on. That's exactly, and it was before the 18, it was that way, but then now it's back. So
Okay.
we're good to go.
No, that's great. And then as far as, so the NOL, when you say that, that's a net operating loss, correct? Is that what that stands for?
That's correct. Yes.
Okay. So basically, if you're a business in 2020, which a lot of small businesses are struggling. I mean, we've got all of the PPP loans that people are trying to get, and to keep people on payroll. And then there's the I can't even think of the name of it, but there's another loan that they can take. I think it's the disaster or something. I'm spacing on the name of it, but they're everybody's trying to get these loans because they're trying to keep people on payroll. They're not able to sell the way that they were, especially restaurants, and just really everybody in every industry is really struggling right now. So there are going to be a lot of small businesses that are going to take big losses this year. Their books are going to be under. So they're going to be able to take that loss at the end of this year and actually send that loss back to their tax returns from 19, 18, 17. You said 5 years that they could spread that loss
Right.
out. Okay. So if they,
But it's even better than that. It's
Okay.
even better than that. The NOL, as it states, and I'm reading from it right here, the provisions would be modified in individuals and business. Notably, NOLs arising in tax years beginning in 2018, 19, and 20 can be carried back 5 years. So the people that had net operating losses in 18 that were not able to take them back can now take them back 5 years. So if you had a loss in 18, 19, or 20, you can now redo your taxes and take them back and capture 5 years back from each of those years to capture profit years and get a refund on the taxes that you paid.
that is big. Because if you had
It's
a loss,
very big.
if you had a loss in 18 and you had a loss in 19, you could be taking 18 all the way back to 2013, and then you could be taking 2019, and I mean, it's just big. It's really big. That's gonna definitely save a lot of people.
It's going to be an interesting year after
Yeah.
July the 15th when people start amending taxes. It's going to be probably as crazy as it is right now.
That's what I was going to say for you, for any CPA, for anybody that does taxes, a financial advisor, anybody that's doing taxes for clients. You guys are going to have so much work on your plate because it's not just the current tax year. I mean, as it is, how many of us know that it's April and don't even try to call your CPA? You're not getting through, right? So now you guys are not just dealing with 1 year of tax returns, but you're having to go back and amend so many other years, up to 5 years worth of amendments. I mean, how long does it take you when you do an amendment? Let's say that somebody just has a very simple return, one S corp and their personals. How long would it typically take you to do an amendment?
It's a very long process because if you have it on your computer where you did their return and you're doing an amendment, it's really not that big of a deal because most of the software is very friendly and you can put in the changes and it kind of almost does it for you. You just need to go in and make sure that it was done right. But if it's a client that you're getting that somebody else did your return, then you basically have to input that return and make the changes because you need to create the corrected return so that you can then put in what wasn't correct and make the adjustments for the difference. So it's a tedious task. That's why we're so careful before we e-file a return. Even now, people try to get in real early. This year, of course, being different. And normally, I want to get it done. I get my refund. And you're like, you make sure you have everything. You have everything. You're sure. As soon as you hit that send button, sure than anything, they contact you and they go, oh, I forgot about this 1099 that I was going to get. That return now needs to be amended because you can't electronically file an amended return. It's all handwork. It's all done the old way.
Wow.
So it's interesting. That's why we push so hard to make sure everybody has everything before we push the send button.
Wow.
Pretty crazy.
That is absolutely crazy. So anybody out there listening, if you guys want to ask a tax grandma any questions at all, please feel free to do so. Throw it up in the feed, no matter where you're watching us, whether it's Facebook, YouTube, or Twitch. Go ahead and send us those messages, and we'd be more than happy to get her to answer those for you. We can put you into contact with her directly if you want to reach out to the office. You can give us a call. It's 844-935-3634. That's 844-WE-LEND for you. That is LEND and the number 4. You guys can check us out at mortgagemomradio.com. There's a contact us button right there. You can also, contact us right from our phone app. You guys want to get our phone app? It's really easy. Text the word mom to 36260. You can call our office. You can send us a message. You can, send us an email, watch our YouTubes, check out our Facebook, check out our Yelp. Anything that you guys need, you can do right from the phone app. The phone app gives you all kinds of great calculators as well. Denise, is there anything else that you want to add for today that you feel is really important to get out there to people that are listening?
No, I think we kind of covered most of it. It's just be careful. It's a crazy year out there. If you get something going, double check and make sure that how it's going to affect you. There's just so many variables that it'd be hard to cover in on a conversation like this. But if you're in progress of dealing with the IRS, just kind of make sure that you stay on track with it and keep those negotiations going. Nothing has died during this time, even though they're not available. They're going to react everything they say on July the 15th. We'll see where it all goes.
Okay. Heidi, do you have any questions listening?
No, but I took some notes.
Okay. Notes are the best. Notes are the best policy. All right. Well, I love it. All right. Well, hey, Denise, thank you so much for being on. Really appreciate it.
Anytime.
We'll have you on again, just like you did this time. You called me up and you said, hey, we've got some new things that came out that we need to talk about. And it was like, can you do it right now? And you're like, no, let me research it a little bit further. I want to make sure I'm giving you the right info. But I love that you came on with us. I really appreciate it. I think that is all fantastic. Anybody listening that wants to get a hold of Denise, give them your telephone number. Let them call you direct. What is it?
It's a 951 area code, so it's 951-965-1060.
Okay, do it one more time because not everybody can write it down that fast.
951-965-1060.
Denise Taylor, everybody, with you are a registered agent with the IRS. Did I get it right this time?
Yeah, it's an enrolled agent with the
Enrolled
IRS.
agent.
You're getting closer.
I'm getting closer every time. All right, well, I love it. Thank you so much, Denise. Really appreciate it.
Thank you very much. Have a good one. Be
All
safe out there. It's
Thank
crazy.
you. We will.
Bye.
Bye-bye.
All right, so lots of changes, huh, Heidi?
Oh my gosh, I love the NOL. That's amazing. That's going to help so many of, especially the small businesses that have been so affected right now.
Huge.
It's, yeah, absolutely huge because they have not been able to do that now. I mean, especially I thought she was only saying for this year, not 18, 19, and 20. So that's awesome.
Yeah, no, it
It's
really
going to
is.
be big for them.
It is. It's going to help those people that maybe had owed money that had to pay in, and now they're going to be able to push all that loss backwards, which means that they're going to be able to get some refund, and that's some cash in their pocket from those previous years that they had to pay in. I mean, it really is a big deal. I really hope, though, you know how the IRS charges us interest on when we owe them money.
Yep.
Wondering if they're going to have to pay interest back for
Wouldn't that be nice? I'm going to go with unlikely, but
yeah. But wouldn't it be nice if things were fair, right?
It would be wonderful.
Yeah, absolutely. So anyway, anybody has any questions, please go ahead and throw those into the feed. If you're listening and it's Saturday and you're in your car and you're listening to the radio, you guys can always check us out. Wednesdays, we're live at 5, whether you want to watch on Facebook, Twitch, or YouTube, we are here. If you want to know when we go live, go ahead and subscribe to the channel and go ahead and turn on that notification button. It will let you know when we are live, and it'll be really easy to log in and watch and get those questions to us. If you guys want to give us a call, it's 844-935-3634. That's 844-WE-LEND-FOR-YOU. That is LEND and the number 4. Heidi and I, which is mostly I, but Heidi and I are both available for phone appointments. All you got to do is call, schedule an appointment. We will call you at that time, and we will talk to you, and we'll talk to you all about your situation, whether it's a purchase, whether it's a refinance, whatever it is that you possibly have going on. We're going to go ahead and talk to you about that, figure out if it's something that is beneficial to you, and then get you moving forward in the right direction. Sometimes it's just talking about a game plan and a path. Other times we can get things started right away. I put in a refinance this week that's going to save $770 for a client. And I mean, that's huge. They're huge. They are still, in an FHA loan. Their property has gone up in value. So not only can we get them into, a loan with no mortgage insurance, so that's already a savings. Their interest rate was right around 5%. They got that loan in December of 18, and that is about where rates were at that point in time.
Yep.
So now we're dropping their interest rate down into the, mid to low 3s. And so the savings between just the difference in interest rate and removing that mortgage insurance is going to save them a lot of money. So if you are out there, you haven't done a refinance yet, now is a great time. Interest rates are still great. And we've got some big news to talk and share about that too, because Movement Mortgage made some huge moves this week. And obviously Mortgage Mom Radio is my radio show, but we work for Movement Mortgage, and we put our loans through Movement Mortgage, and they are just absolutely fantastic, especially right now in this, time, where there's a lot of companies that are slowing things down. So, Heidi, you want to give some good news?
Sure.
All right.
I love giving good news.
I know. I'll let you give a couple of the announcements out. So what do you got?
Okay. So I missed the announcement yesterday, and I was really bummed, but I got to watch it today.
Oh, good.
So We have some changes. So we went over last week, right? We were on last week. Last week, some of the changes that were not necessarily for the better for our clients, but it was based on investor decisions and who would and who would not take certain types of risks. So Movement Mortgage really stands behind their motto, right? They are all about challenges and change and really rolling with it and trying to make the best of it. So they stepped up today and or yesterday, and made some amazing decisions to support our clients, our family. Um, so I'm going to just go over some of the conventional changes, if that's okay.
Yeah, sure. Yeah.
And I'm going to let Debbie say why we can do this.
Okay.
Because I think it's huge. Okay.
Yeah.
So for conventional programs, we went over some really big changes that maybe would have made some of our current borrowers, clients no longer be eligible to do programs right now.
Right. Their
Refis, their transactions, right? Whatever that may be. So we have now gotten some of the restrictions reduced from what they had made them. So we are now back to, if we have an investment property, we do have to have the 720 FICO score, whereas we were kind of limited on whether or not we could do some investment properties.
Mm-hmm. Correct.
We do have home style programs that we can now do again.
Okay, so
and
let's just explain what home style is really quick, because a lot of people they don't know. This is our mortgage lingo, right? So a home style loan would be a renovation loan that you're going to do through Fannie Mae. A renovation loan through FHA would be an FHA 203K, but it is a renovation loan. So for a minute there, we didn't even have it. They had taken it away, and now it is back. We do have it. So now the credit score is 720 to do that home style loan. FHA, we can still do that renovation loan as well. And off the top of my head, I do not know what that FICO score needs to be right off the top of my head. I know a lot of new
680.
changes. 680? Okay, thank you. There were a lot of other changes that bring that down, where we were struggling last week. We had to have, a minimum of a 640 credit score or 680 credit score. We couldn't do cash out. There was a bunch of changes. So I'll let you keep going. What else is new?
Okay. So then manufactured housing,
Yes.
I can speak, I promise.
That's okay.
We are back down to a 640. We went up to a 680 last week.
That's big.
So we can do them again. We can do them at a 640, which is big.
Yes.
It's back, which is amazing.
Yes.
I do have all of the requirements right here. So I'll let you kind of go into why we can do those. And then if you want me to go through the other specifics, I can do that.
So, well, with a manufactured home, the one thing I do want everybody to understand is that there is a big difference between a mobile home and a manufactured home. So if you are thinking about buying a home that is a manufactured home, make sure that you call us. At the end of the day, they're all built the same. They all look the same, but they are not the same. So it's truly the difference between whether or not the unit has gone through all of the requirements necessary to change it from personal property to residential or real estate. Or real property. So you do want to make sure that you're reaching out to us if you're thinking manufactured, but having that credit score dropped from the 680 back down to the 640 is really a fantastic change. All right. So what's next? We've got, go ahead.
We have our government programs.
Yes.
Okay. So FHA, VA, USDA, which we don't do a ton of because out here we don't have a ton of rural property. It's a really hard word for me. I don't know why. Rural. Just one of those words.
To say it, rural. Okay,
yeah.
Go ahead.
So we have a lot of really positive changes that really help the clients that are in those markets.
Hey, how would you like this? My dad, for the longest time, forever, they didn't have addresses. So they were rural Route 4. And the postman had to know which house belonged to Aaron Bosich to deliver the mail.
Right.
Because they were all Route 4. There was no number, no anything. Anyway, so just as you were mentioning the name, the word, it just brought me back to childhood. But anyway, all right, keep going.
That's so funny. Okay, so minimum FICO score, unless there's other restrictions, okay? So, but for the most part, minimum FICO score is back down to a 620. Okay. We could go below that before, but we're back down to a 620 where we were depending either a 640 or a 680
Right.
last week.
Right.
So we're now at a 620.
Yeah. So to just to make sure that to everybody listening, cash out is different than a rate and term or a purchase. So a rate and term and a purchase, we can now go down to 620 with an FHA loan, where
Correct.
we used to be able to go down as low as 580, sometimes even lower. We got bumped up to 640. If it was not cash out is 680. Cash out is still 680. They have not taken that away, but we have dropped in the rate and term and the purchase arena from 640 back down to 620. So that is, again, it's a giant win. That difference between 620 and 640, although it's only 20 points, it truly does exclude a lot of people from the market of being able to refinance their home or be able to purchase.
Absolutely. Also, so manufactured home stays at the 640 for FHA as well. Cash out, like you said, is 680. So it is staying there. Investment property is still a 720.
Okay.
Okay. And we say that because most of the time you can't do government
Investment. Yeah.
investment, but there are situations that you can. So VA cash out cannot be greater than 90%.
So no more 100% cash outs.
No more
90%.
100% cash out.
Okay.
Yep. And then the rates, because of what movement is doing, has allowed us to have a much better rate opportunity with these loans.
Yes. So let me explain what the big announcement was on top of all of these changes to the loan programs, which is fantastic. We are just absolutely so thrilled. I really do believe that we work at the best place that we can, especially for the industry. They support us as loan officers. They support you as our customers and our clients, our family. You know, they're making sure that we're bringing those loan programs to you. You know, as of 3 weeks ago, there was really no jumbo at all in the market. We couldn't get our hands on a jumbo loan. We now have, I counted it today, we have 5 jumbo investors that are back on the books that we can do. We don't have a cash out for a jumbo loan right now, but we can definitely still do a refinance, drop your interest rate, get you into a purchase. So they're finding us those programs that we need. And they took it one step further, and they are now with all of our Fannie, Freddie, all of our conventional and government loans, we are now servicing our own loans. So we are no longer going to be selling the note after you close to a different company that will then take your monthly payments for your servicing. We are going to actually hold those loans. The reason that they're doing that is that, again, we talked about this last week in our show. The reason that we had to change all of these credit scores to be so much higher is that there isn't an appetite in the market right now for those lower credit score loans. And we did not want to start turning people away. So they put their big boy pants on and they said, okay, we're going to hold them, we're going to service them, and we're going to offer these products where other banks aren't. So just giant. Now, what comes
Huge.
along? What comes along with that, Heidi? What is the benefit of that to us as well?
So the benefit to us is we have your loan. We can work with you. We are servicing your loan. It's not going to someone else. You can reach out to us when you have, concerns, you want to talk to us. It's not, you did your loan with us, you made your first payment, and now it's off to Dovermill.
Right.
It's a popular one. So again, nothing wrong with Dovermill. They're a great servicer. We get a lot of compliments on them, but it's no longer here with Movement Mortgage.
Right.
So when you get your information sent out, you're going to get Debbie's information on it.
Right. But there's a bigger win to that even. Rates.
Rates?
Yes. So because we're cutting out the middleman and we're keeping it in-house, we now have better margin for sales. So our rates are also much, much better. Anybody that talked to me last week, that called me this week, or put in an application with me on Monday, heard from me on Tuesday or Wednesday or Thursday or Friday, and your interest rate got better from what I had quoted to you. So obviously the market is moving up, it's moving down, it's moving up, it's moving down. If we locked your rate in 2, 3, 4 weeks ago, you're probably, if not almost closed, already closed. Rates were totally different at that rate lock period. But if you started a
Right.
loan with us late last week, Friday, started the loan with us this week, and you've heard from me about locking in the rate, I guarantee I offered you a lower rate than what we started with. So,
Yeah.
that was one of the benefits of them rolling them out as well, is that we've been able to also step up and give some better rates out. So, where I was
Right.
going with the savings that we found for that one client is that there are still a lot of people out there that have loans with interest rates that are too high. There's still a lot of people that are out there with loans that have mortgage insurance, and
Hmm.
rates are still very, very good. We've been quoting rates in the mid to low threes depending on the program. Are there still interest rates being quoted near 4? Absolutely. Are you an
Yeah.
investor and you've got an investment property and we're going to refinance an investment? Is your rate going to be around 4, maybe a little bit higher? Yes. Do you have a lower credit score? Yes. Your rate might be a little bit closer to 4. Are you trying to pull out cash? You're going to probably be in the mid to high threes. So depending on your loan program, that rate can change. But for that
Right.
perfect borrower, perfect credit score, a ton of equity in your home, and all you're trying to do is drop your interest rate and lower your monthly payment, and your loan amount's under 510, 400, you include all of your taxes and insurance in your monthly payment. Do you see where I'm going with this, Heidi? They need to understand everything that
Absolutely.
goes into this rate,
There's
right? They're in the
right,
very low
and we
threes.
talk about it all the time, right?
We do.
Um,
I locked one in today at 3.187 on a 30-year fix. That is phenomenal. That
right.
was at 0 points. Does everybody get that interest rate? No. But what rate
No.
can you get? We need to talk to you. We need to know what you've got going on. We need to know, what do you owe on your house? How much equity do you have? Are you trying to pull out cash? Where's your credit score? Do you include those taxes and insurance? Where do you live? What kind of property is it? Is it a single family, a condo, 2 to 4 unit? All of those things are going to change what that interest rate is that you will get. But if you want to know if you should, you need to call us and get on the calendar, because I am the first person, and I say it about 5 times a day, 5 brand new calls a day. You're in good shape.
Yep.
Don't do anything. You're in good shape. Don't do anything. I say it every day, all the time. And when it does make sense, I'm going to tell you that it makes sense. So if you want to get on the calendar, give us a call. My cousin, I'm so sorry. I'm losing it. My brother Matt's answering the phone. The call service is answering the phone when he's not. They'll get you scheduled. They'll get you on the calendar, and you can talk to me. You guys want to talk to Heidi? You like her better? Ask for Heidi. She'll get you. He'll get you on her calendar. It's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. You guys want to get that phone app, you want to play with the numbers, and you want to know whether it's a good time to do it or not, download the phone app. The calculators are amazing. Text the word MOM to 36260. That's 36260. Text the word MOM. You'll get the link to our phone app. You can save that to your home screen, and you can start running all kinds of calculators. You can watch us Wednesdays live at 5 right on YouTube. You can watch us on Facebook. You can put your questions in the feed. You can get us to answer those. We'll have Matt read them out loud for us, and we'll make sure that we're getting you all of the information that you need. So is there anything else, Heidi, that you want to touch on today?
You know what? It's been such a crazy week and so busy with everything. I will tell you, so I've had a couple of our current borrowers that called, and they're nervous, right? And they're nervous to call us and ask a bunch of questions. I just want to tell everyone out there, we are happy to answer your questions. You don't have to be nervous to call us and ask us questions, or think they're dumb questions or stupid questions, or you ask them again and again. We get it. This is not what you do for a living. And that's what Debbie and I are here for. So some of the clients, I feel like they're my friends at the end of it, right? We talk all the time. No question is a dumb question. Please don't feel like you're going to irritate us. This is our job. We're happy to help you. We are not that customer service line that you called that is annoyed because they had to answer the phone. I know those people. I have called those people. That is not us. So please,
Right.
and I say it because I always feel so bad when someone's like, I'm so sorry, I forgot. I'm so sorry. Thank you so much. We are so happy to do it. This is why we do our job. We want to help people get in the best financial position they can, get in the home that they want, get, stuff paid off with their refinance, whatever it is that their goal is. We want to help them get there.
Yeah,
So,
absolutely.
that's been most of my week.
Yeah,
is getting these phone calls and walking them through and getting them to the end. And I love it. That's what, my passion is.
Right.
So please call us. If you've been maybe not had the best experience, give us a try. We're happy to help. We're happy to take the calls and walk you through any questions or concerns you have.
No, Heidi, I think that that is great. I'm so happy that you did bring that up because we do get that all of the time. I get a lot of people that say, "I'm so sorry to bother you."
Yeah,
You're not bothering us.
right.
You are our client. You are part of our family. You're part of the mortgage mom world. At that point, we're doing the very best that we can to make sure that you're
Yeah,
being taken care of. We're running at 100 miles an hour. If you don't feel like something has been answered, please reach out. It's not offensive. We want you to feel taken care of. If you don't feel like you've heard from us enough, say something, please. We want to make sure that you feel that you've been taken care of. So important to us. Customer service is very important. Obviously we want to help as many people as we can. We want to get as many loans done as we can. We want to get them all closed in, a 30-day time frame, which, to be honest with you, we've been rolling right about there. I mean, we
yeah,
really have. And we're going to ask you for a lot of paperwork, a lot, but we're going to do it all up front so that the file goes in, it comes out extremely clean. Hopefully, if all we're waiting on is an appraisal to come through the door, and even those are taking a little bit of time. The appraisers are just as
yeah,
busy as everybody else. But if there's a time frame that goes by, a week or two, that you haven't heard from us, don't worry, because for us, if you don't hear from us, you're great. You're solid. You're getting all of those emails all of the time. Loans approved. Your application's been submitted. Your appraisal just came in. If you have a question, reach out and ask. We're trying to make sure that you guys are getting all of the communication that we can. But if you don't hear from us and you just want to check in, please do that. Please do that. It doesn't bother us at all, and it makes us feel
yeah.
good.
Yeah, and we are human. I mean, the other day I got another email saying, "Hey, are you going to answer my other question?" And I was like, "I don't know what that was. I'm so sorry. If you ask me right now, I can answer it." And they asked me, and I was like, "Oh, okay, let me answer it right now." We do miss things.
Yeah.
It's going to happen. But pick up phone, give us a call, shoot us another email. It is definitely not intentional, but we are human. We are really busy, and we are doing the best we can to service every person as if they were the only person. So please pick up phone. Never apologize for calling. Never apologize for asking. We do spend as much time as needed with each person.
Yeah.
So
All right. So what do you guys do? You give us a call. It's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. Give us a call. Get on my calendar. Schedule an appointment. Let's talk. Let's figure out what you've got going on. Let's do that blended rate calculator. Haven't talked about that thing in a while, but it came up the
okay,
other day, just I think yesterday, and it was something that worked out really well for that client to be able to understand. And so let's do that together. It's really important for you to see where things are at. And we'll talk about the blended rate calculator, on maybe next week's show. We've talked
yeah,
about it numerous shows before. You guys can literally go to our podcast and search blended rate calculator. You will find an episode that talks about it. It's great. It shows you what the blended rate is of all of the debts that you're, paying on, whether that's your home, your cars, your credit cards. It gives you an idea of what you're paying in total overall on all of those things. And then that will determine whether or not refinancing at where a cash out interest rate would be, whether that makes sense. But we really get into it in detail. So go to the podcast, listen to those. There's tons of information. Again, just look for blended rate calculator and you'll find it. Speaking of podcasts, we haven't talked about that in a while. So anybody that
right.
does like to listen to podcasts, we do have our podcast and you guys can listen to us, and we put the show out weekly. So go ahead and check us out. Anywhere you like to listen to podcasts, you can find us. It's Mortgage Mom Radio. Everything is Mortgage Mom Radio everywhere. So if you want to find us, go ahead and find us. You can listen to us on iTunes, TuneIn, Stitcher, and anywhere at all that you like to find your podcast. So one other thing that I did want to bring up, and as I was thinking about it, we were talking about, interest rates still being good, and we were talking about saving, people money, and we were talking about interest rates and it letting back. And I know that we kind of sort of talked about it last week, but I don't know that we did. So I want to talk about locking your interest rate, because I have had so many phone calls over the last 2 weeks that I can't even count, like on two hands. I mean, it's probably been 15 to 20 phone calls that I've received. And those phone calls that are coming in are from clients that are shopping, which is great. They should be shopping. They should be finding out who's got the best interest rates for them. But then they're coming back to me later where it's already too late. Interest rates were lower. Now rates are a little higher. And they're telling me that they went with the other lender because the other lender offered them a better interest rate. And then realize that they weren't locked in. If your lender cannot lock you in when your application is complete, then you need to think about calling somebody else. How in the world can you go through a transaction without locking in? Now, we have a lot of clients that don't lock in. They're waiting for a better rate. It doesn't make sense for them to do it yet, but they think rates are coming down. So they want to get a jump start on it. They want to get that loan application in. They want to get that appraisal done. They want to get to that point of the process that all we've got to do is hit a button and they can go ahead and move forward and close up their loan. That's okay. And that is a conversation that we'll have one-on-one with each individual person as to whether or not that's something that they should get started and they should do or they shouldn't. But if you hear an interest rate, you need to ask, are you locking me today?